Well, LeapFrog Investments is a global impact investing funds company. The $135 million profit with purpose fund invests in financial services firms that focus primarily on low-income consumers in Africa and Asia. Joining us now for more on this, Gary Herbert, a South African partner at Gary Herbert from LeapFrog Investments. Thanks for joining us today, Gary. So you're focused on microinsurance. You were the first microinsurance fund globally to invest in the space. I mean, why are you focusing on this area?
Yeah, so when we set up the fund a number of years ago, almost 5 years now, there were lots of funds focused on the credit space, but very few funds that had actually extended beyond credit, focusing on the low-income market. And the insurance, we thought, was a niche space where we could find interesting investments and broaden the reach of insurance into markets.
But microinsurance, why that area?
So microinsurance, you really got to think of it as insurance for the low-income consumer. Okay. So in South Africa, it could be funeral insurance. In other markets, it might be some form of health insurance that allows a family member to be transported to a hospital, as an example. Could insure somebody's motorbike, which they rely on to go to work every day. So it really cuts
Gary,
across
your motto, it says here, it says LeapFrog's motto is that it invests to provide safety nets, springboards to enable life choices. It's a bit of a spin there, I suppose, and the scale necessary to make a dent on global poverty. These are lofty goals, but very worthy, of course. Are we underinsured in Africa, in South Africa and the rest of Africa, and what can you do to fix that?
Sure. Yeah, so South Africa is certainly the insurance market's a lot more developed than through the rest of Africa. So the extent of underinsurance in South Africa is not as great. Certainly once you get into Africa, the insurance levels are extremely low. Some countries it might only be 2-3% insurance, primarily at the middle income market, and the rest of markets grossly underinsured. So really a huge job ahead in order to push insurance out into other markets.
Gary, within these microinsurance businesses, how do you go about collecting premiums? Is it through mobile banking such as M-Pesa, or how's your mode of actually collecting the funds?
Yeah, so premium collection is one of the key challenges. A lot of it's still done through group type of schemes, through corporates, for instance. The retail collection of premiums through individuals remains a significant challenge. So, for instance, in the Nigerian market, one of the South African insurers pulled out primarily because they couldn't collect premiums. There is innovation taking place in terms of mobile. In fact, we're invested into a business that does that, but still relatively in its infancy.
Okay.
And that's going to take a while to change.
And so how do you collect it? Through corporate means? Is it through the employer?
Through the employer, okay. Yeah. That's still the most preferred method, certainly in Africa. Funny enough, in India, there are a number of businesses there where they're actually further developed and collecting more effectively.
Yeah, I'm interested. I mean, you obviously invest in micro-insurers as well. So, I mean, what kind of due diligence goes in there? Because, I mean, surely is there not, almost an increased moral hazard, in risk pooling in lower LSMs? I mean, is there not more encouragement to claim on insurance, etc.? I mean, what sort of, measures have you guys put in place to monitor that?
Yeah, so we work closely with insurers that obviously we invest into. Okay. Typically life insurance is the simplest, okay, in terms of monitoring claims. When you get into the health market, it's increasingly more difficult. And the other market that hasn't got great coverage today has been property insurance at the lower end of the market. And again, there are innovative schemes taking place, particularly with a community type of focus. And you get almost a self-policing taking place within a community to ensure that the claims levels are.
Okay. Would you liken microinsurance to kind of the unsecured lending space in a way where you're catering to the same type of group of people with the same type of risk profile?
Yeah.
And would it be risky as a result?
So there's a fundamental difference. If somebody's buying insurance, they're paying you a premium, right, and you're paying out when there's a claim. In credit, you're providing the money and you're hoping to collect it. So fundamentally, the payment stream works in the opposite direction. Certainly, the requirement for insurance in the lower-income market is well proven and heavily needed. It's needed both as a safety net. So God forbid somebody passes away, how do you then provide for the family, but also as a springboard. So what we're finding is insurance is a very good mechanism to pull people out of poverty. So if somebody knows they can insure their crops, for instance, they're prepared to take more risks in terms of their business than somebody who can't have access to insurance.
How do you measure that positive impact, though?
Yeah, so we spend a lot of time on impact. You can measure the number of people you're reaching, you can measure the type of impact, you can measure the quality of a product that's been provided, you can measure the claims versus the premiums. There's a lot that can be done. You can have focus groups with people who purchase insurance. So to give you an idea, in less than 5 years, the businesses we've invested in reach nearly 19 million people. And of those, about 12.5, 13 million would be low-income consumers. So there is an ability
Gary,
to
what
reach
about
large
the
numbers.
education factor here? We talk about Africans being underbanked and under financial serviced, if you like. Well, what about being underinsured? You have to obviously educate people that have had no exposure to insurance in many cases, and it must be quite a difficult task.
It is difficult, and it requires a significant commitment from the business. So one of the things we worry about when we make investment decisions in terms of which businesses to invest in is, is the business truly aligned in terms of really wanting to impact this market? Are they prepared to invest into the market? And a lot of it is around education. A lot of it is around how you describe a product and how you market the product. And it's a key component of building a successful business, and you've got to make that long-term investment.
Gary, what's the fund's performance been like? Obviously, it's impact investment, but a return on the investment is also important.
Yeah, so I mean, quite importantly, we don't only get money from the impact investment market. A significant portion of our money comes from insurers and other investors, pension fund investors.
I see JP Morgan also an investor here.
Yeah, so JP Morgan is a hybrid. It comes from their social investment fund. But we've got the likes of a TIAA-CREF in the US. Our investors are all US and European based, and recently an Australian based investor. So we are aiming for top quartile performance from a financial perspective, plus making the social impact. And we don't see the two things as being separate. Ultimately, our businesses will only be successful if they're able to actually impact the lower income markets. Those are the markets that they serve. So ultimately, we're backing growth, we're backing scale, we're backing an emerging consumer, and we're very focused on the insurance and the related financial service space.
Okay. And what are the margins like in microinsurance compared to some more traditional insurance? I mean, what is the differential there? Is it in line, or how do you guys see it?
Yeah, it's interesting. Sometimes if you're an early mover, you might get some additional margin for being an early mover in market. But certainly once you're getting to scale, the margins will not be that dissimilar to what you'd find in typical insurance. So you have to build the business at scale, otherwise you're not going to get there.
One of the businesses here in South Africa is All Life, and that of course insurance for people living with HIV/AIDS. So many people were told they were uninsurable, but you've been able to create a product for them. I mean, how's that business doing? Is there scale to grow it further?
Yeah, I mean, All Life's a wonderful story. It's a business that really fills a niche in the South African market. It's the only specialist insurer that focuses on people who are HIV positive. And so to give you an idea, they've more than doubled their number of policies this year in the 10 months to date. So
how many people?
I can't give you the exact numbers, but it's it's certainly reaching today in terms of people who are insured and their families, closing on 100,000 people who would be impacted directly. They also provide some very valuable other services into the market. They provide counselling for people who find out for the first time that they're HIV positive, and a number of other insurers actually pass those on to All Life, who actually deal with the initial interaction. And then most importantly, they look after their policyholders on an ongoing basis in terms of ensuring that they're taking medication correctly, that they're going for the blood tests regularly. And where that's not happening, they actually communicate with the policyholder on a regular basis to ensure, and the effectiveness of that is way higher than you would see in, for instance, medical schemes.